Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee. Joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Overton, and Executive Director of Global Content, Emily Parker. Good morning, Emily and Lawrence.
Good morning.
Good morning.
How are you?
It's a red kind of day. Let's have a look at Bitcoin. The CoinDesk Bitcoin price XPX index currently at $32,169. Bitcoin slightly down just about 2% over the past 24 hours. The CoinDesk Ether price ETX index is actually slightly up, about 24.46, up about just over 2%. And the DFX CoinDesk's DeFi index right now at 183, tracking losses of just over 2%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So we are seeing Bitcoin briefly dipping below $30,000, seems to have made it back above that level. And ETH is also climbing slightly, Lawrence.
Yeah, but of course that doesn't erase the fact that we just had a terrible 24 hours. We had $1 billion in liquidations in the futures markets, in the leverage markets, and you know that says something. A lot of people got their clocks clean, especially people who were holding Luna, who lost 50% of what they had. So not a great day to be in the algo stablecoins, and it's been not a great day. You know, I feel for Do Kwon. I understand he had to take 10 showers after he did his interview with us. Now he took a bath.
Taking a look at UST, it's still at 92 cents. It's supposed to be 1 for 1 for the US dollar, so it's been unable to climb back to its peg. Emily, what are you watching?
Same thing everybody else is watching, the battered crypto market, which is, basically performing very similarly to the stock market. I mean, this is just like not a good time for markets in general, and there's a lot of macro issues that we can get into with our next guest.
All right. Let's take a look at our markets guest. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to further discuss the battered crypto markets is Joseph Kelly, CEO of Bitcoin financial services firm Unchained Capital. Welcome, Joseph.
Hey, y'all. Good morning.
Morning.
So let's get right into it. I want to talk a little bit about this correlation between Bitcoin and crypto and the stock market, because this is just something that everybody's saying, okay, crypto's following the stock market, it's following tech stocks. Can you break down why that is? Because I don't think it's actually obvious why these two should be performing in tandem. Is it because institutional investors are also heavily invested in the stock market and now they're selling crypto to cover their losses? If you could tease out a little bit what this connection actually is, I think it would be very helpful.
Sure. I think it's part of the maturity and maturing process for Bitcoin as a financial asset. We have seen in the last few years a lot more mature and traditional and more sophisticated market participants enter the Bitcoin markets, putting Bitcoin on their balance sheet, trading it more actively. And so now it's really playing a role inside this global financial system, the global markets. You have $40 trillion or more in global equity markets. You have into the hundreds of trillions of overall market value across other assets. And so as there are sell-offs and liquidity events in that broader market, some of those same participants need to go for sources of liquidity, go for sources of cash. And Bitcoin is performing its role as a source of liquidity and source of cash in these troubling times for a lot of firms.
So is it fair to say that institutional investors are a big part of this story because, they are the ones who are selling to make up for the losses? Do we have evidence that that is what's happening?
I think there's definitely anecdata. I think there's less direct evidence that you could probably get people talking to, but I think there's enough there. And based on the volumes and the character of the people that have been public about getting into Bitcoin and the new entrants over the past few years, that it's a pretty safe conclusion to draw. There's multiple factors, a lot of things, a lot of individuals that also have equity portfolios that might be reaching to Bitcoin as a source for cash. So it's not always purely institutions, but across the board, both those groups are affected.
So in this last, in this most recent sell-off that we saw, where would you say what was the source of most of that selling? Do you think that it was institutions or it was retail that got spooked by the difficulties in the equities markets, let's say?
Hard to say. I don't get to get the privilege of reading cross industry order books and who's making the markets there, but I'd say it does probably lean in favor of institutions, just from my impression. While certainly I think everybody's been affected by a depressed stock market and needs for liquidity in the last 6 months.
I guess one question is, how does that explain the spillover into the altcoin market, though? I mean, I sort of understand this idea. We have a lot of institutions, buying Bitcoin, but why is like Shiba Inu, why is that tanking as well? Like, I don't think there's a lot of institutional investors in SHIB, for example. So could you explain like why it's spilling over to the altcoin and why the altcoin market is so red as well?
I think you actually have had some institutions sort of eking out into those markets, into DeFi and these other yield farming plays or other areas. And so I think that those folks, they've been hit. Those are thinner markets. And so also as people need to exit them, there's going to be even more further downward price pressure. So usually those people are exiting those for Bitcoin, and then they want to exit Bitcoin to dollars, being the most liquid dollar market in the industry.
So what do you think the bottom is for Bitcoin?
I think the bottom is, I can't give price predictions. It could go lower. I do think in the low 20s could be rough, but it would be surprised if anything would south of there.
Overnight, we also saw the Terra Luna ecosystem take a bit of a burn. We're seeing that UST, their stablecoin, has been unable to recapture its 1-to-1 US dollar peg. What impact do you think that is having on the rest of the crypto markets?
I think it's a scary headline thing. I think it can cause questions and doubts and FUD about the broader cryptocurrency industry. I think it's one of the things that you kind of get to hold in contrast to Bitcoin as a much more sound, much more explainable asset, and that isn't kind of over-promising or trying to do things like maintain a dollar peg. So I think it's just one way that Bitcoin will continue to shine in the long run, and a lot of other assets and crucial projects will just do what they do.
Do you think that they'll be able to recover their peg?
No clue. I think that's a really hard thing. I think I don't know if we figured out how to maintain pegs in traditional markets or this cryptocurrency world either. So really too many tail risks, too much. It's really difficult problem. I don't know, people can solve.
So we're seeing some inflation numbers come out tomorrow. What do you, if you could have a crystal ball, what do you think is going to happen? Inflation is going to be high. What do you think the impact will be on the market?
I don't know. I think probably a lot of the expectations are priced in. I think that any number they print is probably going to be south of still what people believe to be the reality. So it's just kind of this game of how much of a fiction is the number going to be versus what we, in the market, and what do we feel like the common knowledge is, like inflation actually is. So it's great that I think that more and more of the prints are getting closer, and that, high single digits and maybe into the teens of inflation. But I think that's probably a lot of people are already expecting what's coming.
All right, Joseph Su, some more red days ahead. Thank you for joining us this morning, Joseph. That was Unchained Capital CEO Joseph Kelly. Coming up, we've got more markets analysis with broker and trading platform TradeStation Group. Have a live look at Bitcoin. The CoinDesk Bitcoin price XCX index is at $32,186. Bitcoin pulling back just over 2%. The CoinDesk Ether price ETX index is at 24.48. ETH is climbing about 2.3% over the past 24 hours. And the DFX, CoinDesk's DeFi index, is at 183, pulling back about 1.7%.
serious whiplash in the past 24 hours. You had Bitcoin dropping all the way down below 30, and now it's back up to roughly around 32. So joining us now to discuss is David Russell. He's Vice President of Intelligence at broker and trading platform TradeStation Group. Welcome, David.
Good morning, Lawrence. How are you?
How are you? I think a lot of people, how they're doing is kind of not feeling well today. But you're looking at the markets from a really unique perspective because obviously you're seeing a lot of flows yourself. So kind of going to Emily's question with our previous guest, where do you see the connection between what's happening in the equities markets and what's happening in the crypto markets? How are the customers behaving? Are they freaking out over their losses in equities and then selling off, let's say, in crypto, or vice versa? How do you see it? I mean, and granted, it's microseconds, but nonetheless, you could probably get some sense, correct?
Well, yeah, I think it comes down to simply risk appetite. At the end of the day, the idea of something like Bitcoin, holding its ground when the market is pulling back significantly, when the Federal Reserve is doing something it hasn't done in over a generation in terms of really not caring what the equity market does, that's going to be difficult for all assets. And I think you always have to realize that, there's volatility in the markets. And when things start happening and people start getting scared, you simply get these kind of follow through. The other thing I think it is important to realize is that, cryptocurrencies are essentially, correlated to the NASDAQ, to growth stocks. If you really think about it, cryptocurrencies are essentially a fintech, in terms of how people think about it. And that entire area of the equity market has been under pressure, for a while now. So I don't think we can really separate those two things because ultimately that's how they do kind of correlate.
Is that connection because the type of investor who would invest in a tech stock is the type of person who would invest in crypto, or is there some other reason why?
Well, I think they're similar assets because they're long-term growth stories. And when interest rates are low, people can price in that kind of growth. And when interest rates start going up, that growth is a lot less attractive. I mean, look at Bitcoin. It's a long-term growth story, kind of like, a tech stock that is growing significantly. So I think ultimately that's what it is as an asset. And that's how the market's going to think about it.
But isn't the fundamental principle of Bitcoin that it's a hedge against inflation? Like, shouldn't this be Bitcoin's moment in the sun? I mean, inflation is here, right? Why is it not fulfilling the purpose that it's supposed to fulfill, which is to actually hedge against this kind of other market volatility or against inflation?
Well, I'd say that was it. I mean, right now, a lot of the things that are hedges against inflation don't really work. And you cannot separate it from what's happening in the currency market, for example. The US dollar has gone back to its highest level in a long time. And I think ultimately Bitcoin is, I don't know if I would say it is a hedge against inflation. That's not how the market views it. You could say that about gold, and it hasn't worked recently. So I think that assumption about Bitcoin, that there's a certain part of it. But when I really think about what's the exciting thing about cryptocurrencies and things like Ethereum, it's the incredible widening adoption, widening use cases, the way it's going to disrupt financial markets. That is a growth story. That is not a safe haven anti-inflation story. So I think when you really look at it, the idea that Bitcoin is a hedge against inflation, it might make some sense and it might be true at times. But for the last year or two, the narrative in crypto has been growth. It's been adoption. And I think ultimately that's how the market's viewing it right now.
So just kind of quickly follow up on that, this could be a direct response to critics like Warren Buffett. What are these use cases that you're referring to? I mean, what are the main use cases of Bitcoin and Ethereum? Because some people would say that there really aren't any big ones.
Well, I am not an expert in cryptocurrencies. I have looked at it, a lot over time. My real focus is in the equity market, but simply the use of it as different forms of payment and things like that. There is clearly areas where people have seen, increased use of it, and it's really not my area of expertise, but I have been able to see how the market views it.
So I wonder, what is the strategy amid this volatility? Are you seeing a lot of folks just shorting away at cryptocurrencies? And if so, maybe you could tell us which ones. Or how are people hedging their losses? Or is this a buying opportunity?
Well, I take it from the perspective of mostly an equity guy, and that's really, my view. And I think we have to recognize that we've had a situation here that is really unprecedented. The last few times that the market sold off like this, the Fed was willing to step in and be kind or, kind of supportive, like in late 2018, during March of 2020. Now we have a Fed that really doesn't care, and they've made very clear we want to see some pain in the market. We want to get this inflation thing over with. But I think, to me, the thing that is most interesting here is that Jerome Powell has ripped off that Band-Aid really fast. And there's a lot of signs that it's working and that we're nearing a point where these fears are going to be priced in. I think it's important to realize that some of the inflationary things we've seen are starting to ease, things like used car prices, things like lumber. We faced a truly unique situation in the market. We saw a collapse of confidence and bullishness in the equity market. If you look at some of the surveys, like we haven't seen since the early 90s. And the market was only down, 15, 16% overall off its high of the S&P 500. So I think that's really what we need to focus on. We had the combination of a hawkish Federal Reserve and then also an incredible uncertainty of a war happening in an area that's incredibly important to commodity markets, energy, and food prices in terms of, what's happening in Ukraine. These were like a really bad combination of forces. And a lot of that now, I think, is priced in. And so I would kind of take the perspective, where we are right now on May 10th, as a lot of that bad news has been priced in and played out for the last 5 or 6 months. And if you look at it now, things might not be so bad going forward. The 10-year Treasury yield is back above that kind of 3 to 3.25 area. That is extremely important for the NASDAQ, and I would not be surprised if that's really something where crypto investors should be looking.
Nonetheless, I mean, just wrapping it up here, you're looking at, as you said, you're looking at a lot in the equities market. So where do you see the bottom in the NASDAQ happening? I mean, do you think that there's still more room to go downwards? Or do you think that we might start turning the corner relatively?
The Philadelphia Semiconductor Index is back toward that low of where it was, where it broke out back around March about a year ago. These levels now are looking very much like we've priced in a lot of negativity. The main thing I'm focused on right now is the S&P kind of coming down. There's a descending channel. If you look at from the high that we made at the end of last year coming down, this second low is kind of down to that channel, and it's back to where the S&P kind of peaked around March of 2021. So from my perspective right now, a lot of bad news has been priced in, and we've completed something of an ABC correction on the S&P 500. We went under 4,000, and to me, that's really the key thing. I think a lot of negativity is now priced in at this point, and people should be looking for the pendulum to swing back.
So, David, if you're saying a lot of the negativity has been priced in, do you see it stabilizing out from here on out or going lower potentially?
Well, we have this CPI report on tomorrow. From my perspective, unless we have more shocks, we could very much see a kind of buy the news event following this and the beginning of putting this behind us.
All right. David, we got in there, but thank you for joining us. That was TradeStation Group VP of Market Intelligence, David Russell. Coming up, well, UST has been unable to recover its US dollar peg. We'll talk more about that, and checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
Hi, I'm Christy Harkin, Managing Editor of Technology, and you're watching CoinDesk TV.
Welcome back. Let's check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So we have this new Fed report that is basically repeating warnings about stablecoins. It's often said before. A senior Treasury official is saying tokens could experience dangerous customer runs, and the timing is incredible because we are seeing Terra UST losing its peg. Good timing.
Yeah, good morning. Yeah, this report was published yesterday. It came out at around 4 o'clock. At the time, UST was, loosely guessing, I think it was trading around 90-something cents. And then, after the report came out, it plummeted to, below 85 cents, below 82 cents.
Going all the way down to 60 cents.
The timing was coincidental, but yeah, it's had a rough night. But what's really, getting me is this report is a biannual report. It comes out every 6 months, and clearly there's a lot of thought and effort that has to go into it. So the timing is largely purely coincidental, and I imagine that the authors of this report probably feeling pretty good about themselves right now. But as you said, this is not the first time they've warned that stablecoins are subject to run risks, and it's part of this kind of, the report itself is looking at broader financial stability risks to the U.S. and the globe. So, if we're looking at UST's collapse last night as a potentially broader risk to the larger crypto ecosystem, then we are seeing this report kind of vindicated. We're seeing that what happens to one cryptocurrency might have a broader market impact, and which is exactly what this report's warning about.
Yeah, well, yeah, exactly. What was the ultimate TLDR of the report itself? How would you summarize it?
Well, it's really just here to analyze and say, here are these risks that we're watching out for. Here's what might happen if those risks are executed or, they happen. But it's more of a, general, hey, FYI, this is a thing that we're looking out for. This is a thing that's happening. It's a thing that could happen, hypothetically.
Well, what's interesting is that they've often talked about these risks in relation to Tether or potentially USDC, not singling out specifically UST and algorithmic stablecoins. Do you see
the
more
report,
scrutiny perhaps into
mentions,
things like UST in the future?
I have to imagine so. I mean, you're absolutely correct. The report, yesterday's report, only mentioned BUSD, so Binance Dollar, USDC, and Tether. And, it's going off of market cap. Those are the three largest stablecoins according to the Fed, and coin market cap by volume. It's hard to say whether or not they're going to look at, something like UST, but I have to imagine it's going to make a lot more of an impact. Even if it's not explicitly mentioned, algorithmic stablecoins as a whole are probably going to have a lot more attention focused on them, simply because yesterday's event, it's not a black swan, but it is one of those things that people are going to look at, months from now and say, wow, remember when that happened? Even if it recovers, which at this point I don't think it has yet, it's still, a lot of people have lost money. Some people have made money trying to short it. It's going to be, something that people are going to have to take a look at and analyze and say, okay, well, how did this go wrong, and what might happen next time?
All right, we'll be watching. Thank you, Nick, for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
The Terra Luna ecosystem on a wild ride, stablecoin UST dipping as low as 60 cents last night when it was supposed to be pegged 1-to-1 to the US dollar. Luna, which is supposed to be minted to stabilize UST, has lost over 40% of its value over the past 24 hours. Joining us now to discuss is Bennett Tomlin, co-host of Crypto Critics Corner. Hi, Bennett. So, in many ways, this was predictable. It just happened faster than expected. The Luna Foundation Guard has been working to prevent this implosion by pivoting and stocking up on BTC reserves and other cryptocurrencies so that UST is not just backed by the minting and burning of Luna. So what went wrong? Maybe you could walk us through what happened last night.
Well, I don't think it's 100% clear exactly what went wrong and what started to go wrong really on Saturday. The entire system basically depends on a collective belief that Luna is valuable, which gives value to Terra, the derivatives of it. And so the best understanding I can come to is that for some reason, people started to lose some amount of confidence in the system as a whole. And as it did, it became increasingly hard for it to maintain its peg. Because the way you keep it is by people exchanging their dollar worth of Terra for a dollar worth of Luna and minting that. However, when the price of Luna starts to fall, minting more can have a depressing effect on the price of Luna. They tried to defend against this somewhat by using the Bitcoin reserve, which they had to deploy, but so far that seems like it's been insufficient.
Mm-hmm. What do you think triggered this in the beginning? I mean, there are a lot of theories out there that maybe Citadel was involved, A16Z was involved, but you also have Jump Capital, who has been backing Terra Luna and potentially injecting their funds into it as well.
I have not been able to figure out who did it yet. I think the Citadel Ken Griffin story is the one I would pick if I was writing this up as a piece of fiction, just because it's the most exciting. People have suggested that it might be Justin Sun doing it to try to promote his own algorithmic stablecoin, but I don't think it was that, because I think that shaking the faith in the largest algorithmic stablecoin is likely to shake the collective confidence in algorithmic stablecoins as a whole. And so for Justin, doing that when he's about to launch his own would be counterproductive. There was one theory going around on Twitter yesterday that someone had actually opened up a large Bitcoin short and were using the attack on Terra as an indirect way to get their Bitcoin short to pay out by effectively forcing Terraform Labs to use their reserve of Bitcoin to stabilize the peg. And so by forcing Terraform Labs to sell and use that Bitcoin, they hoped to depress the price of Bitcoin, which is a fun theory, but I have yet to see enough evidence to definitively say who was doing what last night.
So Bennett, I mean, obviously, I don't want to say you got out your dancing shoes to dance on any graves last night, but I'm sure you're seeing this from a different perspective, and that is that you find something not quite kosher in Terraform Labs and what they're doing. Can you explain what bothers you about how they're reacting in this crisis?
I don't necessarily know that how they're reacting in this specific crisis is any of my issues with Terraform Labs. More broadly, my issues with algorithmic stablecoins, like as a concept, because they effectively depend on this financial alchemy of convincing a sufficient mass of people that a thing with effectively zero intrinsic value has enough value to stabilize this massive ecosystem of stable assets. And I think that that is a challenging bit of alchemy to maintain, but that it's a very popular bit of alchemy because while you're building it up, while you're doing all the unsustainable things like subsidizing the anchor yield and trying to grow the demand that way, there are many people in the ecosystem who can make money from those unsustainable efforts. And so during the growth phase of an algorithmic stablecoin, they're always very popular. And then at the point when they're finally large enough to become an attractive target, they depeg, a bunch of people get hurt, and then everyone just goes, we were just trying an experiment. How are we supposed to know this was going to happen?
So you see that you think that they might be able to restore the peg. We're looking at essentially Luna would have to fall in price, correct? I mean, they would essentially have to sell Luna to buy UST to bring back the parity ultimately.
But are they doing that, or are they just lending out from the reserves that they built?
Exactly. Right. They don't necessarily need to mint and sell new Luna anymore because they created the Luna Foundation Guard with this multi-billion-dollar reserve of Bitcoin. And so they can instead use those Bitcoins to try to do open market operations to defend the peg. And in doing so, they prevent the minting of more Luna and further price pressure there, but it necessitates using their reserves.
How do you think those... How do you think those reserves are being used? Like, they're lending it out to these market makers, and then what happens from there? Because they're maintaining that, oh, we're not selling Bitcoin, but what is exactly happening to the Bitcoin that they're lending?
I'm not 100% sure.
Nobody
My guess
really
is we're not selling it as a bit of talking around the problem. Like, we loan this much to market makers, they pay back whatever they end up not having to use, and we didn't really sell the part that we don't get back. It was just the market maker doing open market operations. And like, I think that's probably also why the loans are structured with like both Bitcoin and UST as part of the loan, just so that the market makers can easily use both sides of the liquidity to basically effectively try to trade it back up and make these buy orders. And so they're perhaps not directly selling Bitcoin, but I imagine throughout this process they'll end up with less Bitcoin than they started with. So
Bennett, I guess the question is, what do you think the outcome of this is going to be? Because it seems like there's two camps. There's, the so-called dancing on the grave camp who's like, this is the end, it's finally blowing up. But then there's this sort of like really devoted community who, I think there's a possibility that this could end like, okay, we triumphed over this adversity. Look at how resilient we are. I mean, it doesn't seem like that's impossible, right? So how big a blow do you think this will actually be to this model? Or are they just going to kind of survive and say like, we prevailed over this?
I think it's helpful to look back at March of 2020 for Terra and Luna, which was the last time we saw this really massive peg break and the threat of like an impending algorithmic stablecoin death spiral. BitMEX ended up closing their Luna market, which slowed the price fall for long enough for bidders to step in, stabilize the market as a whole. They eventually returned it to peg, and it has been mostly at peg since then. And so I think that it is possible they'll be able to burn through a portion of their reserves and the funds they have, bring this back up to peg, and keep it functioning for a while. But every time something like this happens, every time there's this peg break, these destabilizations, it becomes harder to restore the confidence and faith of the community as a whole. And so therefore more expensive to restore and maintain that faith. And so for now, they have these Bitcoin reserves. They still have some Terraform Labs fund they can use to, for example, increase the anchor yield and try to increase the demand to slow the fall. But these things are inherently unsustainable and depend on them having these access to funds outside of the protocol itself. And so they can do it for now, and they can continue to use these reserves to try to return it to peg and keep the system functioning. But at some point, you run out of funds. There's a finite amount of money you can throw at this thing to keep it running.
Yeah, well, they
I mean, this is the fundamental question then. Why use UST at all? If you can't necessarily, if you can't assume anymore that it'll be pegged to the dollar, why would you borrow it or lend it at all? Why would anybody use it in, say, DeFi? Why would anybody use it as a stable coin if it's not stable? I mean, is this spell the end? It's been well over, it's been several hours, and that's an eternity in DeFi. So what is this? This is necessarily going to be the end just because it can't maintain the peg for 24 hours, let's say.
I think one of the many reasons people have used Terra in general is because you've basically been able to take money out of Terraform Labs' pocket and put it in your own, right? Is because they've been subsidizing the yield and doing all this, and that for most of its history, it's done a pretty good job of remaining stable. So it seemed like a worthwhile bet to get some Terra and to use Anchor, either directly or through something like Abracadabra's DegenBox, to get this subsidized yield and take the money from Terraform Labs, basically. I think it is plausible, at least for a short term, Terraform Labs can find enough money to incentivize enough people to want to continue doing that. Long term, I'm not confident that will continue to work, but it is possible to me that they would be able to keep it functioning by finding a way to make it worthwhile for people to continue using it.
Well, certainly they have convinced so many investors, institutional investors, to invest in this, and a whole community who wants to buy into this 20% annual percentage yield on Anchor Protocol, which may not be worth as much now that UST can't maintain its peg with the US dollar. But you also mentioned something else, exchanges, and I wonder how they're coordinating, because we hear that Binance supposedly has a floor on, how much UST will go down. I wonder if you have any further insights into that.
Yeah. So it's possible to construct what they're doing as analogous to like a circuit breaker, right? If Terra has suddenly dropped by like 30 cents, that's a pretty radical move in a stablecoin. And I think that it is plausible many markets might circuit break something which had like a 30% drop. The more challenging part is the fact that like Binance shut off withdrawals and stuff. And so they had put in this price floor, stopped their own trading, and then you couldn't even remove it to take it somewhere else or do an on-chain swap or anything like that because Binance had shut off the withdrawals. That becomes a much trickier situation. And it takes us back to March of 2020, which I mentioned just a couple minutes ago when BitMEX shut down when Luna was crashing. And many of the traders who were trading Luna at the time and who are still part of the Luna community appreciate that BitMEX did that because by having that pause, that period there, they were able to coordinate it and get enough bidders to create enough demand to eventually return the system to a mostly functional state. I think that the habit of centralized exchanges of doing things like this is long and well known at this point. And so it should be a part of your risk analysis if you're holding crypto on exchanges or using crypto exchanges at all, that they might do this to you.
So clearly Binance's calculation was that they were trying to stave off some even worse case scenario. What might have happened if Binance had not intervened?
Well, yeah, it's possible that Binance was trying to like save the system as a whole, and it's possible they had just set up some naive limits or something before and weren't anticipating this system being under that kind of stress. Because like the stated reason for shutting off withdrawals is that the Terra chain got congested and fees were going up, right? And so it's possible they had a limit like that pre-programmed where if the fees go above a certain level, these go off. And they just had not anticipated that happening in this kind of situation. If the Terra price had continued to fall and people had kept aggressively trying to use the arbitrage mechanism in the protocol, we would have continued to see minting of more Luna into the market, which likely would have continued to depress the Luna price. And as the Luna price continued to fall, it makes each subsequent mint, each subsequent new Luna released into the market have there's less demand to soak up those Luna, and so they keep affecting the price more and more, making it harder and harder to bring the system back to parity and back to peg.
Mm-hmm. Well, Luna Foundation Guard has deployed the remainder of their BTC reserves onto Binance, so we'll see how that goes toward restoring the peg in UST. Bennett, thank you so much for joining us. Appreciate your insights. That was Crypto Critics Corner co-host Bennett Tomlin. Let's check in with crypto Twitter, which has been in fire over the past 24 hours with the tweet of the day. This is from Texture, one of the early contributors to Ethereum, tweeting, anytime someone comes out promising some revolutionary stuff and touting billions of dollars and hyping you up about how rich you're going to get, you're the mark. Just take some time to think about that.
Take 10 showers, I think it was.
Thank you, Emily. Thank you, Lawrence. I'm your host, Christine Lee. Meantime, check out The Hash at noon Eastern and All About Bitcoin at 3 o'clock. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
A new president is waiting in the wings in the Philippines. Welcome to the Daily Forecast, May 10th, 2022. I'm Megha Chadha of Forecast, covering all things blockchain. While official results are not yet in, a landslide victory is expected for the son of former dictator Ferdinand Marcos in the Philippines presidential election. But what could a win for Ferdinand Marcos Jr., better known as Bong Bong, mean for the country's blockchain industry? We'll take a look at that plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with a look at the markets where the sell-off continues. Bitcoin plunged to a 10-month low Tuesday morning in Asia, dipping below the $30,000 mark according to data from CoinGecko. Meanwhile, Terra's dollar-pegged algorithmic stablecoin Terra USD or UST depegged for the second time this week. It dropped as low as 67 US cents in early morning trading on Tuesday in Asia, though it recovered slightly as the morning went on. The price of Terra's Luna token also dropped by over 50% since late last week, resulting in its market capitalization falling below that of the UST stablecoin. The Terra network uses its native token Luna as collateral to peg the UST to the US dollar with smart contracts reportedly used to control Luna's supply in order to maintain the UST's dollar peg. But with Luna's market cap lower than the UST's, there is likely not enough capital to back the underlying token, and that's affecting the peg. The Luna Foundation Guard has stepped in, saying it would lend $750 million worth of its Bitcoin reserves to help protect the UST peg. While Terra has said it is fighting back, promising more updates to come. So will it be enough? Forecast editor-in-chief Angie Lau is in Singapore right now, and she caught up with Michael Wu of Amber Group, getting his thoughts on the situation.
Whether it's Luna or other algorithmic stablecoins, they will find the path to evolution, right? Eventually, I think that will remain to be an important segment of the market. But I think the mechanism, the whole infrastructure to support it will also have to evolve after this.
Do you think Luna has the ability to come back?
I think they've got a very strong team, right, and a lot of backing from crypto native players, a growing ecosystem. I think they're building a lot of things, right, not just DeFi but also other type of applications, gaming, NFTs and all of that. So as an ecosystem, right, I think they've got a very good thing going right now. How do they get through this? I think it depends on a lot of things, and we will see. But overall, I think we always have a lot of confidence on crypto entrepreneurs and teams like that who can continue to build and innovate throughout cycles.
Staying in Singapore, where crypto exchange CoinHacko has been granted a major payment institution license. The license allows the exchange to provide digital payment token or DPT services under the Monetary Authority of Singapore's Payment Services Act. CoinHacko is just the fourth firm to receive a full license so far in Singapore. Two other crypto firms, Revolut and Luno, received in-principle approvals to operate fully regulated crypto services last month, but over 100 license applications are still pending review. Many DPT service providers currently operate in Singapore under an exemption while they await a decision from the Monetary Authority on their license applications. You can find those stories and a whole lot more at focus.news. With no clear platform but unity, dictator's son and former Senator Ferdinand Marcos Jr. is poised to become the next president of the Philippines. But what will this mean for the blockchain sector in the country? Focus Jenny Ortiz reports from Angono, Philippines.
36 years after the historic ousting of a dictator through the People Power Revolution, the Philippines has elected his son and namesake Ferdinand Marcos Jr. as the next president of the country. As of Tuesday morning Asia time, unofficial results from the Philippine poll body Transparency server showed Marcos Jr. in the lead with over 30.6 million votes, while current Vice President Leni Robredo was left trailing almost 16 million votes behind. Marcos Jr.'s running mate, Davao City Mayor Sara Duterte, who is the daughter of the outgoing President Rodrigo Duterte, is also leading the vice presidential race. So what does a Marcos Duterte tandem mean for the blockchain sector in the country? Attorney Rafael Padilla, co-founder of Black Devs Asia, a volunteer-driven organization that organizes blockchain meetups, told Forecast that while the poll results won't please investors, the blockchain industry won't be so concerned.
Generally, I hope I'm wrong, but we're not very optimistic that this is something that investors would find to be a good news. But for the blockchain industry, for the crypto industry, I would dare say that perhaps the impact would be negligible. It has something to do with the fact that the blockchain industry actually exists as a decentralized ecosystem. You have teams operating worldwide, globally. And so whatever happens here in the Philippines, if worse comes to worse, then Philippine founders would just have to move somewhere else. And the service might still be available.
Meanwhile, Emerson Fonseca, CEO of NEM Philippines and founder of Coin Sessions Entertainment, said that the next administration can utilize blockchain technology in government processes such as project bidding, approval, and funding. That way, he said the government can utilize the technology to eliminate corruption and express freedom of information. As for what we can expect the Marcos Jr. administration to push in terms of the cryptocurrency industry, Padilla has this to say.
So right now, we have no idea exactly what the policy of the incoming administration. They haven't published really or have spoken about their platforms and anything specific in this emerging sunrise industry, the crypto industry. But the best that perhaps we can hope for now is some form of continuity and stability. Considering that the current administration, the outgoing Duterte administration, is somehow to a more or less some extent aligned with the incoming Marcos administration.
For Forecast, I'm Jenny Ortiz, Angono, Philippines.
The largest American crypto exchange is borrowing money from Goldman Sachs. While the loan value hasn't been disclosed, it has been collateralized with Bitcoin, bringing legacy financial institutions and new age fintech firms even closer. How is this moving the markets, and what could it mean for the evolution of new age financial products? Damien Lowe, CEO of Matrix Asset Management, joins in to discuss this and lots more. Great to have you with us, Damien.
Thank you for having me.
Damien, Goldman Sachs, one of Wall Street's stalwarts, lending against Bitcoin is pretty significant, and the Coinbase CEO says it bridges the gap between fiat and crypto economies. What do you think?
I think it's definitely a big step, but it's not. The trajectory is still the same as what I've been expecting and I've been thinking for the last few years overall. The pace of institutionalization continues, and if anything, it's accelerating. And while this is a big milestone, I think it was bound to happen at some point where a large investment bank would be teaming up or doing a proof of concept trade with a big exchange or a big crypto native player overall. So I congratulated them for the deal, and I think there'll definitely be more to come in the future.
Interestingly, Goldman has made the loan without holding the Bitcoin collateral themselves, which instead lies with a third-party custodian. Why would they do that, and how could it influence the structuring of such future loans?
The commercial terms weren't that important right now, at least for Goldman. It really was more of a proof of concept for them overall. What's more important, I think, was that they were able to build the commercial terms into the yield itself, and that they had some kind of collateral that they could get their access to, even though it's held in escrow overall. And in the future, when Goldman has more use cases for Bitcoin overall, I'm sure they could restructure the deals differently for all their loans overall. So for the first one, I'm sure they were just fine with a third party holding it overall.
Now, compared to traditional loan products, crypto loans come at high interest rates, and in many deals so far, loans have been raised between 40 to 60% of the value being pledged. What's your sense here?
I think it's a combination of a few factors. One is the comfort level of taking the coin mainly Bitcoin, but other cryptocurrencies as collateral. So there's that initial comfort level. Once there's a little bit more historical data for it, I think those loan-to-value ratios will improve. The other things that I think will make it change is that as cryptocurrencies become less volatile, as it becomes something that everyone holds overall and the volatility comes down, the loan-to-value would decrease as well. Thirdly, and I think that as there's more and more adoption, there's more products where you can actually make use of the Bitcoin rather than it just sitting in a cold wallet somewhere. I think that would also improve the loan-to-value ratios overall for the loans. So yes, initially it's like that, but I think it will just be improving overall. So the trajectory is the right way, even though the starting point might not be where we want it to be in the future.
We are seeing innovative financial crypto products, not just at the institutional, but also at the retail level. Crypto lender Nexo just gave out an over $3 million loan against the collateral of 2 CryptoPunk zombies. What sort of scope do you see for products at the retail level?
I think there would be a lot. So what will happen is that there's a lot of innovation going on. Obviously, just where there's a lot of creativity and there's a lot of different people trying new things, a lot of it will not get the traction and the network effect that will make it enduring. But from that, as you saw in 2017, when DeFi projects, were being worked on and it actually got developed over the years. There'll be a few winners, but those winners will be really innovative, really well adopted, and it's a really good environment to continue the creativity, the fostering, and the expanding of cryptocurrencies overall. So yes, we'll start to see more of these things, and I think it will flourish. But which specific protocols, instruments, it's hard to say who will be the winner overall.
Well, it's just the start for innovative financial products, and there's so much more to come. Thank you so much, Damien, for joining us today.
Thanks again for having me.
And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Forecast Megha Chadha. Until next time.